Hey everyone, welcome back to another stock market open live stream. Well, futures have basically completely recovered everything, if not even more, from the retaliatory strikes from Israel against Iran. This is likely because the strikes against Iran were feared likely to have been originally maybe worse or like actually damaging that Israel would conduct against Iran. But it sounds like potentially some of the strikes against Iran were really just designed to be a messaging tool by Israel, that Israel didn't really desire to create any damage, just desired instead to create the signal that, hey, if we wanted to, we could strike against you. Now that's pretty remarkable because it now creates this really bizarre tit for tat saber rattling that is somewhat unprecedented, since it's just like I've attacked you and done nothing, and then the response is, oh yeah, well now I've attacked you and done nothing. It's quite odd. Like, I'm used to the saber rattling of, the Un family, where we have nuclear bombs and we will destroy you. That's North Korea. And then nothing happens, right? Or, they try to launch a missile and look at our missile, and then it falls in the water somewhere. So that's typically what we see when we hear saber rattling in geopolitics. But this is like a new era. This is like geopolitics where it's like, I will send hundreds of kamikaze drones at you. Go ahead and shoot them all down. And then Israel's like, oh yeah? Well, I will send coordinated missile strikes at you. Go ahead and shoot them all down. And America's gonna pay for it all. This is just weird. That's all I have to say. It's weird. But it's certainly substantially better than, what it could devolve into. And I would suggest that is exactly why we're seeing the movement in the futures market and now the pre-market here the way we are. You have, for example, here on Bitcoin, you have the futures market have essentially a heart attack over this massive fear that, oh my gosh, we could be going into substantial war, and then no, maybe nothing happened. It's basically the same thing that happened when Iran struck Israel. You had this substantial dip on Bitcoin, and as soon as it was clear that all of the sort of attack was cleared without any death, right back up. Excuse me. So we could see that, although I don't know that we fully recovered everything. We could see that this weekend, right here, this weekend, we had this nice drop over here. This was in anticipation of the attack. We dropped to about 67. At the time of the attack, we dropped right about to the same line that we were bouncing around over here. You can see we dropped. This is a very important line. If you don't have this drawn, make sure you have it drawn. But it's the 61.7 line on Bitcoin. And we were actually respecting this downtrend here somewhat too. But anyway, 61.7 on BTC. And you can see, I mean, we've had bounce, bounce over here. We go through, reject, failed breakout, and then of course, some bouncing over here. But that's been a pretty critical line. So, point is, markets are much happier that this saber rattling is not causing death and destruction than if, let's say, it were. So, with that, let's take a peek at how some of the sticks are moving. The NASDAQ futures just went positive. We've got Netflix down 6%. Now, I was actually hoping they would be down a little bit more than that. So, I opened this short position against Netflix for earnings yesterday. We'll see how it does when the market opens. but that's going to be entertaining. And then we've got NVIDIA right there, knocking on the door of that 850 line. Not a surprise to see some of that recovery on being below 850. TSM goes in for shaving off another 1.9% in the pre-market doozles. You've got Apple down 11 bips. You've got Enphase up 40. Supermicros sitting at 933, up 50. And Tesla's down 1. Keep in mind, Tesla just recalled about 3,800 Cybertrucks. Ooh, DJT is going for another rally day here. So let's take a look at this. You've got Tesla recalled 3,878 Cyber pickup trucks due to a rework of the accelerator pedals. If you haven't heard, that accelerator pedal basically had a plastic cover that would potentially slip off and then get stuck under the sort of fabric of the vehicle and the framing of the vehicle, and would essentially lead the accelerator pedal to floor it and get stuck in that position. Of course, if that ever happened to you, you could slam on the brake and hold your foot on the brake, and the brake would override the accelerator. But that's certainly a frightening and scary situation that has been potentially implicated in 2 accidents already. One against the front of a hotel, and mostly landscaping, and one, I think, into a pole. So it's already caused a couple accidents. But yeah, that Cybertruck now facing a recall because of that accelerator pedal. Obviously, you imagine that's not a very challenging problem to solve, and it's good to see Tesla solving it. But that is not an over-the-air update. Worth mentioning. Okay, good. So now we're going to, let's see here. Let's see what we got. I think there's, by the way, a... let's see here. I think we have... Last I checked, there was somebody threatening to blow themselves up in front of the French-Iranian consulate. Yeah, here it is.
You can see the bomb squad there. It is unclear if the suspect was arrested and what he had in his possession. Meanwhile, switching...
yeah, given that they're standing there all chill like that, let's go ahead and assume that the suspect has been arrested. All right, now let's go. No, we don't want to go to 5. Stand by. We must change the channel. There we go. All righty, let's listen in.
Certainly right now, it is very much in focus for them.
If you were to compare your anxiety, if you have it, about inflation versus employment, where would it be? And I say that because we were just talking before with Joe Livornia, and I've been monitoring a lot of the Jason Furman comments even over the past week, and he made one, which was that he thinks that if, in fact, the Fed were to lower interest rates in this calendar year, that it would be a function of a weak employment situation, not necessarily the inflation picture.
So it's a good point. And I think this is the tension right now for policymakers. They have to weigh the risk around loosening this policy too soon or keeping it too tight and risking employment. And of course, as you know, they have a dual mandate. They care about both of these things very much. But the one they control most directly is going to be that inflation number. And they must gain their confidence to get back to 2% in a fairly timely way if they're going to retain credibility and keep inflation expectations anchored around that 2%.
When you say timely way, you're not in the camp that says, you know what, they've gotten through the hard part, they can get to 2% eventually, and they can take their time to do it. You think that there's actually an urgency to it?
I think there's always an urgency to it, Andrew, and that doesn't mean that you have to double down and get there tomorrow. But I do think as they look at their forecast, and this has always been true, they have allowed inflation to drift down, and it's done that. But as they look to see their confidence in that 2%, those forecasts have been pushing out. And so far, I think with inflation expectations anchored, that has been appropriate. What I'd be watching for is, and I think the committee is too, they don't want to see those expectations change. That's what allows them to be patient. That's what allows them to take their time to look at the data right now.
But should investors think that a hike could be on the table, Esther?
I do think that. I don't know that that's a base case,
Wow.
Melissa, but I do think they need to be aware that the committee right now is saying inflation is holding in a way that isn't continuing that steady decline. And I think under that scenario, they are keeping all of their options on the table, including a rate increase. Now, again, I don't expect that, but I do think it's a signal that the risk can move either way, and they have to be very attentive to that.
In trying to figure out whether the risk tips towards a hike or towards a cut, Esther, I'm just curious. Do you think if we stay where we are right now, does that merit a hike in your view, or do we need to see an upward trajectory in inflation?
I think the committee has been pretty clear in signaling they think they're done with the hiking part, and it is still their expectation that inflation will continue to come down. When I listen to the Fed speakers, whether or not they talk about cutting this year or not, I think they are continuing to look for confidence in their forecast and believe that inflation will come down. So yes, I do think that if inflation begins to turn on somewhat of a consistent basis, obviously they understand what the instrument is. They have to respond to that. But I think for now, they seem pretty comfortable in this wait and see mode.
Esther, what do you make of all the commentary by economists and others who say, you know what, as you get closer to the presidential election, despite how independent the Federal Reserve may want to be, may want to look, all of that there is always a little bit of a birdie on somebody's shoulder saying, maybe we should, we got to be careful about how we do this. Again, by the way, for the credibility of the Federal Reserve.
So, Andrew, as you know, this is one of the great features of how Congress designed this institution, was to provide political insulation around it, if you will. And having served on that committee, this isn't a part of the discussion when you are deciding what allows you to meet your mandate. So, yes, we're in an environment this year where the election will loom large, where people will interpret the Fed's actions relative to who it helps, who it might hurt. And that just comes with the territory. But I think the public should be confident that the Federal Reserve is really focused on the information it's getting in and making the decisions that they believe are in the long run interest of the economy.
Okay, Esther, I want to thank you for joining us on this Friday morning.
Yeah, so she used to be on the FOMC, and so that's very interesting. See your comments that you should definitely consider potentially a hike. Though I know that's mentioned by some of those on the fringe. I don't see it as highly likely, but yeah, I mean, of course, it would be possible if we end up continuing to get inflation that rises. So right now, though, what I'm going to do is I'd really like to take a peek at American Express's earnings, which beat. American Express represents a higher income demographic than any of the other sort of banks or credit card issuers. And I think what's useful is understanding their charge-offs, mostly because we've seen banks tell us that charge-offs are increasing. And I think there's a substantial concern with that. And so I'd like to go through a little bit of their earnings just to see what's going on here. But let's see. First, let me get this. Okay. There we go. There we go. Okay. Keep. Very well. Here we are. Press the button. Let's see what we have. So Q4, let's see here. Non-interest revenues actually came in slightly negative year over year, but your total interest income rose Oh, sorry, that's quarter over quarter. Yeah, no, year over year, their total non-interest rose 6%. Their interest income rose 31%. Okay, where are charge-offs? That's what I would like to see. Where are they? How interesting. They don't actually break down their charge-offs in this. Well, that does me no good. Why would they do that? So that must be over here under expenses. And it is unknown. That is quite annoying. Oh, write-offs, they call it. Aha. Net write-off rate. Okay, here we go. So year over year, we're up from 1.7 to 2.3. So you're seeing it at even American Express. So they call it a write-off rather than a charge-off. That's fine. 2.3 divided by 1.7. That's an increase of only 35%. The other banks were all between a 70 to 100% increase in their write-offs. Here you're only seeing about a 35%. This makes sense, though, because, again, you're typically appealing to those higher income individuals. Credit loss reserves and beginning balance, provisions, net write-offs. Yeah, but look at those. Principal less recoveries. Look at these write-offs over here. The write-offs still expanded. You went to 705 in write-offs versus 379. 705 divided by 397. 705 divided by 397. Still an increase of 77% in these write-offs. And then we have some other net recoveries over here, which also nearly doubled. So we definitely have an increase here. However, this is interesting. Percent of past due, they wrote marked down to 297. This is a little confusing because it looks like more of them are being affected, but after the charge-offs, there's some kind of adjustment here. The delinquency rate isn't as high as what you're seeing at JPM, which is in the 3.4-ish% range. But it did seem to grow. Okay. And they have different segments here. Little complicated how they're breaking this down. There's clearly an increase, but it's nowhere near as powerful as the increase that you're seeing at some of the banks. And then you've got multiple different segments with their write-offs. Okay. Anyway, let's listen in here for a moment and we'll get some more news.
Given the national security threats that are real and have been at the heart of why Congress is acting.
I want to get into all that in just 1 second, but let me just ask you about the escalation piece, because I would argue potentially that the escalation piece just happened overnight. To bring you that news for the audience that may have not heard it just yet, one of the things we heard was that China told Apple no longer to keep WhatsApp, Signal, and a number of other messaging apps in the App Store that's available in China, and whether you consider that an escalation, if you will, of where this is all headed.
Well, there's two forms of escalation. One is a natural and obvious issue around what and how our cybersecurity posture fits within the U.S. and concerns about Chinese hacker groups is sort of category one. Category two, of course, is this access to U.S. applications in China that's already in place. You can't get certain social media applications like Facebook or Google in China. But the third aspect I wanted to make sure you were aware of is if they just simply refuse to sell. What and how would we take on the role of actual removal or degradation of the service in terms of all the provisions in the law? So the latter is where I thought there may be some escalation. The other two have already
but answer that question. So let's say China says, we're not selling TikTok. So then you're going to have to call up Apple and you're going to have to say, take it out of the App Store?
Well, mechanically, what they would say is cease any updates. And so you just see, versions of the app kind of stale and not capable of upgrade. So that would kind of be the pragmatic view of it. But my hope, and again, this is like posturing, that this may be just if it's 51-49, that there could be a deal. This may. All
right. Oh, cyber China talk is kind of exhausting. Inflation regarding the Middle East tensions, worth touching on briefly here. Oil nicely back down, actually. You ran up to about 90.5 on Brent, and that entirely gave up its run. Now you're actually down 80 basis points. Remember, oil is very, very supply-side driven. So if you don't expect supply-side disruptions, oil prices can go right back down. And so they did. Gold's back at 2,400, and the 10-year bond yield, while it's down about 4 basis points on the yield, it's nowhere near as much down as the 12 or 13 basis points that it was at the time. So quite remarkable flip there following that counterattack by Israel, that surprise attack on the birthday of the Supreme Leader. All right, very well. Next up, let's see what some of the suits are up to and what we've got as well with earnings. I know yesterday we had Netflix with some of its guidance coming in slightly weaker than markets were looking for. To me, Netflix's reaction to the downside is probably going to be repeated very frequently. That is, companies will report beats and increases in earnings, and then you'll see their stock down, like American Express. American Express beat, stock's down. It's only down 4 basis points. This isn't exactly like a very volatile stock, but doesn't matter. It's down on a beat, right? And then we go ahead and pop in here for Netflix, and we're down the devil's number, 666. So this is pretty remarkable. American Express is calling for softness in small business spending. That doesn't surprise me at all. And let's see here. Still sees fiscal year EPS of somewhere around plus or minus $12.90-ish cents, which is roughly in line with expectations. So you get an in line with expectations report and a beat, and you're still moving down. So this softness in small business, by the way, this is very common in a high interest rate environment. Usually, your smallest businesses are going to pay the most interest. They're the ones taking on loans. They're the ones with low cash positions. They're the ones that get screwed by high rates, not the big companies. And that's unfortunate for small businesses. It sucks. Makes it harder to function and survive and quite frankly, to compete with larger businesses. It's actually more, it's like anti-competitive, if you will. It's more monopolistic for the big boys and girls, I suppose, out there. So, all right. What else do we have here? We've got Netflix. I want to look at some of their numbers. Oh, their earnings report was insane. Their actual earnings call. Let me see if I can pull up their Netflix transcript. This was just stupid, if I can recall correctly. Okay, here, we're going to do this together. Netflix earnings call Q1 2024. Their complaints about the market. Let's pull this up. And not wanting to provide subscriber data again in the future were remarkable. If I could find this correctly, I want to see this subscriber data. So there we go. Okay, so what they're going to do is they're saying they're thinking about this strategically and thoughtfully. Okay, and we can look at this together here. And so we'll periodically update member growth when we grow and when we hit certain major milestones. It's just not going to be part of our regular reporting. So they're no longer going to report regular member growth as part of their normal reporting numbers. We want to do all of this thoughtfully and give everyone time to adjust. So we're going to continue to report subscribers until Q1 of next year, which links into our next annual revenue guidance for 2025. So we think that provides long-range continuity, and we expect that will provide an effective bridge and transition. But ultimately, we think this is a better approach that reflects the evolution of the business. Basically, they're going to go for providing engagement numbers as opposed to subscription numbers, which I think is abnormal. Now, I realize there's Ging D here in the chat who's like, that's not abnormal. Okay, Netflix owner. Here's the reality. Subscription services are driven by membership. And just like Facebook is, Instagram is, YouTube is, and markets appreciate the clarity that is provided by how many members we have and what member growth looks like. Now, we understand some of those members may not be active, and that's why we like numbers like monthly active users. But to suggest we're going to go away from how many people are users takes away clarity of how much you're going to be able to calculate in terms of earnings. Instead, they're trying to now go to providing engagement metrics, which is somewhat weird. I guess they're trying to go from the angle of, oh, but with engagement, you'll be able to try to figure out ballpark how much we have about, how many people might be seeing ads, but that doesn't work for the ad-free versions. So, they're going to provide this engagement report regularly, and they think it'll make it easier to track progress on engagement. But basically, what they're saying is, hey, engagement is more important than how many people are signing up and paying for the service. So screw you, shareholders. You're going to get engagement numbers as opposed to growth numbers, probably because we're kind of running out of growth anyway. And now we're going to measure or want to measure our company a little bit differently. That's my take. So don't really love that, but that's all right. It's all right. So, and that doesn't make Netflix a bad service. I still have a Netflix subscription. I just think as a user, it'd kind of be like Tesla saying, we're not going to give you guidance anymore on how many vehicles we're going to produce. Yeah, I said that on purpose. And then instead just say, here's how many FSD miles people are driving. That kind of uncertainty makes shareholders very nervous. I'm not saying Netflix isn't a good stock or it's a bad company or whatever. I'm not saying that at all. I'm just saying it provides less clarity to the investors, and anytime investors get less clarity, guess what happens? The stock goes down. It's that simple. This is why, we've seen Tesla fall so much. It's a lack of guidance. We don't have clear answers. We don't have a clarity on exactly what's going on. And so that leads to confusion and fear and uncertainty and doubt, and then the stock price goes down. But anyway, so they talk about how they feel good about growth, how they're going to be. See, this is actually, I actually have a concern about this. So our growth in the back half of 2024 is really comping off those hard comps. Remember, I said this in a video yesterday. Somebody here writes, as an accountant, I don't even know how this is legal. Yeah. The Netflix analogy for Tesla is cars sold. Yeah. That's fair. Cars sold rather than produced. That's fair. Yes. I agree. But anyway, what's interesting here is just yesterday, I made a video. And I said, hey, you need to be careful because 2023 comps are going to be hard. I literally said that in yesterday's video, and I specifically talked about Netflix. I said 2023 comps will be hard, and you're probably going to have a year of misses. Here you go. Chief Financial Officer at Netflix. So our growth in the back half of 24 is really kind of comping off those hard comps. So we're just going to stop providing guidance. Okay. Whatever. I mean, I know they're still going to provide, some guidance, revenue guidance, which I suppose that's useful. It's just less clarity. Well, I mean, they'll be fine. They'll get through this, but again, it creates some uncertainty. And it also somewhat suggests that the years of like mega growth are kind of coming to a stall. So yeah, we'll see where that goes. All right, what do we got over here?
Data centers. So.
Right. Max, pleasure to speak with you. Thanks so much for your time.
As a degenerate, I need a stock to YOLO in. What's your call, Kevin? Oh, man. That's a really good question. Like, what stock do you yeet into right now? AI feels so toppy and heavily priced. Apple and Tesla are selling down, pretty solidly. A lot of your core discretionaries have sold down a little bit, but they're still pretty toppy. Staple / discretionary. So like your Costco's, your Wingstops, and otherwise. I wonder how Chipotle's been doing. Yeah, everything just feels so rich right now. I will say in the AI space, something that I am watching the sell-off closely on is AMD. Look at that AMD sell-off. But the question is, are you catching a falling knife, yeeting in now? Do you wait for the cues to stop dropping and maybe you get through earnings season, right? Like, do you really want to buy in to a toppy market right before earnings season? I think the answer to that is no. Obviously not, personalized advice for you here. I don't think the answer is now. I think the answer is get through earnings season. Is this earnings season going to set up a 3-month bear market that ends up pushing us into potentially closer to a recession because we start getting more layoffs and interest rates are still high? This earnings season will tell you that. So you really only need like 30 days of patience. And I don't know that it's worth taking that risk before earnings season, especially since you had ASML down like 5% after earnings, TSMC down like 5% after earnings, Netflix down 5% after earnings. Do you see the pattern here? Like, American Express beats and it's down like 4 basis points, right? So the pattern of earnings so far hasn't been fantastic. I mean, let's write that down again. So that was TSM. Let's see here. TSMC was, I'll just do TSM. TSM down, TSM down 4.86% after earnings, right? Netflix down 6 to 7% after earnings. What's another one? ASML. They were the day before that. So they were down 2%, but that was followed by, or preceded by, rather. Yeah, look at that, down 7%. So they're down, 7%, then another 2% pre-market or next day, right? And then you had APX beat, but down 4 basis points in pre-market. So the point here is the trend of earnings hasn't been great. Trend of earnings not great. So if I go to the earnings schedule, and let's go to the earnings calendar and just look back at some of the others that we've had. So TSM, Netflix, we covered those. What about ASML? We covered that. Oh, we had the bank earnings. Oh, yeah, right? The bank earnings. JPM was down like 5%. So look at JPM. Let's see if they've recovered. They had earnings right here. Look at that, 6.4% after JPM earnings, right? So write that down as well. JPM down 6.47% after earnings. Is American Express not down? It was this morning when I looked. Oh, it's up 25 bips now. 25 beat, but I'll call it flat then. Well, it's up about 25 base. We'll see what AXP does. But flat to up 25 BP only. Okay, so then we've got Wells Fargo. Let's see what they did on earnings day. So Wells Fargo on earnings day was here. I think they were before the what's it called? Pre-market. So you were down 39 bips only. They're probably up after earnings actually. Wells Fargo, roughly up after earnings. And how was Citi? Oops. Citigroup? Citigroup had earnings. Yeah, Citigroup is down after earnings. Citi down after earnings. And then we have BOFA, which I think is just BOF. No, what is Bank of America? Bank of America. Oh, BAC. Okay. So they had their earnings here. Okay, so we're down after earnings as well. Although it's somewhat trying to recover back down after earnings. So really you have one that's up. American Express barely up. So the trend of earnings hasn't been great. And the earnings haven't actually been bad. Earnings themselves have not been bad. It's just the market's reaction to them. And so I think that's worth paying attention to. So yeah, I mean, like, I know there's the idea of, okay, well then, buy the dip. But, you have to evaluate, is the dip just starting? And I don't know, I mean, I hate to say it, but when I look at the Qs, do I really want to buy the dip here? I mean, let's go to the week chart. Look at what you're buying the dip on. You have this beautiful Nike swoosh here. And it's like, guys, look, dip, all in. Like, that's not a dip. That's a sneeze. I don't know. So we'll see.
Long-term value of those new customers, particularly in India, younger customers, not unlike what I want to talk about when we talk about American Express.
Yep.
What people realize is, for the first time, and I will even go as far as to say Procter's doing the same thing. For the first time, we're not as levered to China as we think. And I think Wall Street is way behind the demographic changes that we're seeing. Where did Tim, Tim Cook, he puts factories where he wants customers. This man spent more time in Jakarta than we've seen. Now, you could say, well, wait a second, he capitulated on WhatsApp. I would say that he makes deals. He's always been pragmatic. But the pragmatic nature of Indonesia, a country of more than 200 million people, growing like crazy, to me shows, Vietnam, 100 million people.
So you're talking about not just diversifying China's locus as a supply chain hub, but as a customer hub on the demand side, too.
Our country is addicted to thinking that China is a winner in everything. Our inferior.
Okay. Here, $5 donation. Somebody says, planning to sign a new home closing in September. So you have a new construction build. The cool thing about new construction is you basically have an option contract. Think about it. You probably have a $5,000 deposit on that home. And if the market goes into recession between now and September, guess what you're not going to do? You're not going to buy the freaking home. So you literally have this 5-month option that's costing you $1,000 a month. Big freaking deal. Like, decide if you really want to buy it then. What are they going to do? Take your deposit? Ouch. You see what I'm saying? Like, you'll know then. Look at home prices then. But, if you could, if you could afford the real estate, and, it's a nice new home, I encourage you not to over-improve it. But, is it really that big of a deal? Probably not. So, good for you. Enjoy it and enjoy the fact that it's probably going to get delayed. So don't actually expect to move in September. Expect to move in like November. But again, and you get 2 more months of an option. So don't screw up your lease because you'll be homeless. They always get delayed. Let's see here. Ooh, Ella says, what companies did poorly in 2023? That would be interesting is if we just sort of looked up like 2023 stock market losers. Worst performing stocks of 2023. Look at that. Who knew that there would be an article on that? So that would be, of course, the energy companies, folks. SolarEdge, SunPower, Enphase, ChargePoint, Plug Power. Worst performing sector. Worst performing sector by far. Yeah, that sounds about right. Moderna and Pfizer. Estee Lauder. Hawaii Electric. Yep, Hawaiian Electric, rather. How interesting. Yeah. Yeah, that's interesting. S-Edge. Let's see what's going on over here. Yeah, look at that on the week chart. I mean, just hell. Absolute hell. So, NVIDIA, big red candle. Did it get rejected at 850? Come on. Please, somebody come in here and tell me my lines suck. Yesterday, we waited for Tesla to get rejected at, I forgot what line it was. I think it was the 152 line. It got rejected at the 152, and I sent an alert. I go, short here. And that sucker printed like $11,000. At the same time, I went short on an overbought, like an above move line on some breakout on coin. And if I just held that to the close, it would have done really well. But I took like $700 or $800 of profit on that one. So yesterday's trades were good, profitable. Net over $11,000, and that's assuming that a little $500 bet I made at the end of the day is probably not going to be worth anything. But I did that on purpose. It was a short on Netflix, but it was like so out of the money. We'll see what happens in about 20 minutes. But I wrote that one off when I made it. I probably really need Netflix to be down like 20% for that one to work, but that's okay. It's down like 7%. So I don't anticipate Netflix is going to go down 20%. But yeah, anyway, those are just some examples of some of the trades that we were making. And usually if I just respect the lines, I do really well. I find that if I get really excited about something and then I'm like chasing, I'll destroy my trades. And so like respecting the lines does so ridiculously well. And I mean, you look at this. Like, I mean, y'all see this stuff live. It's not like I really dislike seeing people sort of like hindsight trade where, they kind of like replay. This is what I did and this is what happened. Because I don't know, if it's not live, it doesn't feel real. And I think it's too easy to rig. But like, if I make money or lose money, I do it in real time. So anyway. So those are all in the Stocks and Psychology of Money group, and we have a coupon code expiring tonight. This weekend, by the way, I'm just going to be doing lectures all freaking weekend long, because then we're going into our House Hack Roadshow. So we're going to have new content in all of the courses: real estate, property management, the efficiency course, the stocks course, with the trade alerts, all of that. So that'll be fun. We'll do a lot of lecture filming this weekend. And if you haven't heard yet, we're going to do a House Hack Roadshow. It looks like the locations we're going to be going to, if you want to, if you want to vote on that, I don't think I have it in the description right now, but if you want to vote on that, go to MetKevin, that's missing an E, metkevin.com/roadshow. And basically what we're going to do is we're going to travel for House Hack into probably about 20 different cities, and y'all could meet us where we land, so you could take a look at the PP if you want, and then we'll be able to talk House Hack. So it's really designed for potential investors of House Hack or the mini funds. Again, go to househack.com/roadshow to like put your name and email in so you can get notified if we go there. Right now, just a quick heads up, it looks like the itinerary is going to include Miami, Orlando, Tampa, New York City, which will probably be Teterboro. Probably won't actually go into Manhattan. LA, San Diego, Chicago, maybe Toronto, Canada, Dallas, Austin, maybe Houston, Seattle, maybe Spokane. I'm not sure about that. San Jose, TBD on Denver, Phoenix, Vegas. So anyway, like, if you have a different city in mind, just go to metkevin.com/roadshow and vote for it. All right, let's focus back on what we're doing here. Yeah, Toronto, Canada is surprising me. We got a lot of folks there in Toronto. But yeah, vote, please, vote. If you have a city, with Chicago, I'd probably go to the smaller airport, Midway, just because the giant ones are a pain in the ass. But anyway, so yeah, and again, the goal is to, if you're an accredited investor, you could learn about investing in House Hack. If you're a non-accredited investor, you could learn about the mini funds. They're both gonna be great. Hashtag no guarantees. Read the prospectuses and the risks before investing. Don't sue me, bro. SEC, there's a risk with every investment. It's true. Okay. I get why the SEC has the rules it does. Like, you don't want people going like, your investment will guarantee 10x. Like, you have to balance that. Like, or it'll go to zero, right? So I get it. I think that's totally fair and reasonable. Anyway, the futures are dropping again a little bit right now. Let's take a peek at this. So we've got Nvidia dumping about 1.2%. I don't particularly see any news here other than it's just vogue right now to sell AI. So it is a little bit of a challenging environment right now for artificial intelligence and for some of these other trades. So you have, let's see here. What is this? What is it? What kind of alert could I possibly be getting on my watch? Somebody, India's Ola Cabs plans $500 million IPO. What do I care? I'm taking this watch off now. For some reason, I hate live streaming with my watch on. No, it bothers me. All right, so maybe because I don't want to be bothered. That's fair. Anyway, so let's see. Right, so next is this open's going to be important. Not only are we going to get to see what happens with Netflix after earnings, we'll get to see if American Express holds on to those gains. If you need bundle coupons, remember email us at staff@meetkevin.com because you can bundle up for the symposium as well, or if you have questions. NASDAQ futures, you know, they wanted to go green there for a moment, but we're down about 30 bips. So it looks like a lot of the green's already been priced in right now. Let's see what's a larger move down. Somebody here says UiPath is the real growth opportunity. Okay, let me see here. Path. This is, yeah, this one's been sucking for a while if I remember right. Yeah, you're pretty much in the toilet here. Thank you so much for the Canadian $10. I know that's worth about $1 in freedom units, but I really appreciate that. I have Canadian family. It's a joke. It's a joke. No, I appreciate it. Thank you. Thanks for the info and hard work. Hope your family is well. Keep going. People need your assistance. Thanks, man. Yeah, crazy times, and I appreciate that. You know, we talked to the doctors again about Summer. She should be coming home hopefully in the next 2 weeks. I was hoping for tax day, but yes, it's taking a little longer, but you know, she's alive, so and she's doing quite well. I actually have an updated picture of her. I think everybody deserves an updated picture of Summer. Let's see here. It'll just take me a second. She's like, I don't know, my heart just sort of breaks for her, but she'll be home soon. Oh, she's so cute. So we can't wait. So, and she's got a twin sister, identical twin sister here. Yeah, they're starting to look similar, but this one still weighs a little less. So, come on, iPad. What's your problem today? But yeah, I actually really like Canadians. Canadians are like some of the nicest people. So there she is, little Summer, little cutie. So this was yesterday. So I can't wait for her to come home. Anyway, okay, so let's keep seeing here. We've got Netflix down. What the hell just happened to Super Microcomputer? Holy crap-a-molies. Oh my lordas. Oh my lordas. Oh wow. Why did Super Microcomputer just take a giant dump? What trading platform to use? So I execute my trades on Webull, but I also like using TradingView. I usually just use that on my iPad. Yeah. So Super Micro, there's no reason. That's interesting. Let's see here. I don't see anything because ARM is moving down as well on this. This is very interesting. Down 6% now. It's bouncing now. And you got that move on ARM as well. No particular reason for that. Dell's down 2%. Dell, at this point, is like a ripoff, in my opinion. 2% of their business doubled because of AI, and they ran up like $50. That's crazy to me. Palantir is like sucking. It's down like 1% every day. What site do I use for news? You know, I'm a reader. Oh, did ARM get downgraded? I don't like personally doing a lot of watching. Everybody's different. Most people actually just prefer watching. Well, which makes sense because you can do multiple things at a time. Most people don't read, or like because you want to multitask and do something else, and that's okay. It's not like a diss. It's not like one's better than the other. I just like reading, so I'll do, obviously some dose of X. You have to be careful with X though because it's like depressing. Like your mood just goes to if you spend too much time on X. But Financial Times, Bloomberg, BBC, these are okay. BBC people hate, I know, but I like them for just seeing what's going on in the Eurozone. Al Jazeera is great for the Middle East, and then of course you could pay attention to just the wire alerts. The wire alerts you could get from either Bloomberg or Reuters, which is now, I think they're LSEG now is what they're called. They used to be called Refinitiv. But, then you can actually just sort of get like breaking news alerts, which are useful. Kind of like that one I had on my watch on that IPO. But, yeah. Cool. So, U.S. Treasury imposes West Bank-related sanctions. Biden to announce third round of sanctions against Palestinians in West Bank. People on the West Bank are just getting beat up from all angles. Like the non-terrorist ones. Because there are innocent people living there too. So, okay, TJT. Let's see here. That explains why Elon is miserable. Yeah. X is a very difficult spot because the algo, unfortunately, promotes substantial cynicism, jade, and I don't want to say hate. It's just more like jaded cynicism, and some of it is just it's driven towards because it's mostly you're only getting a preview of the first snippet of text. If it's not outrageous, it doesn't get the engagement right away. So you need the outrage. And so the context is missing there sometimes. So that's why I try to limit myself there. Zero Hedge is good. I give them a shout out. They're very bearish though. Please, if you're gonna read Zero Hedge, you're talking about like libertarian bears. So like, I'm not saying that's bad. I'm just saying just know what the bias is of the platform that you're reading. So. Anyway, hopefully that answers your question. So, Trump Media Group up 11%. Coinbase is up 288. You've got what else do we have here? Matterport 0.5%. Bank of America third, along there with JPM and American Express. American Express is probably going to push up. Some of the bank earnings. So, one thing that I do like about X, I'll say, is they're promoting video now as much as they're promoting Spaces, which is kind of cool. Finally, I actually prefer video to just Spaces audio. But yesterday, Elon actually liked a tweet of mine. It's like, oh my gosh, I know, right? So Elon liked this tweet. You can see here, Elon. And I wrote, props to Elon. While I was live covering the Israel counterattack, I had 28,000 viewers on X and only 14K on YouTube, yet I have 5K the subs there on YouTube. So the algo does push that video on X. So I have to give, respect where it's owed. So, again, and I'm a user. I'm an avid user of X. I mean, we pay for the yellow badge there. I'm just saying, like, be careful. Your mood can be affected by the time you spend on there. That's all I'm saying. All right. So, let's see. Let's see what the suits are saying this morning. All right. So... managers cut equity exposure as global uncertainty mounts. Well, yeah, that entirely makes sense. So, what is this? Active investment managers. Okay. Equity exposure dropped to 63% from 104% in March. Leveraged, obviously, per Bloomberg. And which was the highest level. That was the highest level since November of 2021. The market can go another 4 to 5% lower. Maybe another 4 to 5% equity exposure cuts coming. Well, that could get even worse if you get an AI sort of sell-off, right? You know, I sent an alert like maybe a month ago at this point to short ARM because I thought it was going to go to $90. The sucker is now almost in the frickin' 90s. It's crazy. Pre-market, it's at $100 flat right now. So we'll see what happens. But yeah, I mean, this ARM sell-off was anticipated. The problem is how to make money on it in the face of theta decay. Yesterday helped a lot. Yesterday and the day before, because the sucker was down like 11%, which is great. And now it's happening to super micro, and that'll keep happening. I think your AI space here is going to get punished. Super micro, but we'll see how earnings go. Super micro is trying to recover. It's down about 5% right now from the 6 it was down. Okay, we have 4 minutes to go. Let's see. All right. Let's take a look at what the Rabobank has said about the Fed and rate cuts. Take a sec to pull here. Standing by. And number 5. All right, so what do we have here? Consider your source. Today, media and markets today still spout and swallow propaganda. He argues we can't look at history and just err in one area as to what happens everywhere. Fine. 2024, we started with 7 rate cuts, then 6, 5, 4, 3, 2. Yeah. Now Bloomberg asks, what if Fed rate cuts are sparking an economic boom? Right. As Jay Powell says, they'll keep rates as high as long as needed. Okay. So what's their take? What's their point of all this referencing? What looms closer are the elections. Populism may emerge. Okay. He speaks of the importance of fate. Okay, get to the point here. Like, he's got this whole, like, comparison to Rome, which is interesting. But I kind of want to know, is there any, like, point to this, Rabobank? Rome took 650 years to fail. Could Western checks and balances help? Okay. Yeah, I don't really know where they're going with this. And then they get into the market the day ahead. Okay, that's quite bizarre. Rabobank, I'll have to spend more time than I'm willing to donate right now on your ancient Rome comparisons. So instead, let's try, we could go, you know who always does well is the Marketeer, TME. They usually have some interesting insights in terms of some technical analysis. Kind of like them, so I gotta give them a shout out. So let's see what we have here. And we've only got a couple minutes left before the bell. So what do we have here? S&P 500, massive hammer candle overnight, touching the 100-day at intraday lows. Let's see how this develops. But these are very rare candles when it comes to indices. Occurring post-sell-offs, they tend to mark short-term reversals. Ooh, can we get a reversal? Let's see, 45 seconds to the bell here. Sell low, buy high. What's this? Dealers in gamma land. All right, VIX ain't low. VIX back up. All right, let's get ready for the bell here, and we can always come back to that. So we're about 30 seconds away from the bell, and then we're gonna watch Netflix. Let's see what we're not gonna watch the show, but we're gonna watch, and should be pretty interesting. So here we go. Know Who Wants to Be a Millionaire today?
I'm saying that maybe the plaintiffs have reached a bridge too far against corporate America.
and maybe the Supreme Court one day will agree with them.
Well, Wolk was on Squawk on Tuesday and said they're going to look at foreign financing of the plaintiffs.
Yeah, I mean, it's time. It's time. J&J's leading a very informed, sophisticated attack on the tactics of the plaintiffs. There is a plaintiff firm that is very good, which is this Seeger Weiss, and I don't want to I don't want to dismiss them. They're very good.
Jim mentions Abbott.
All right, so there is the opening. We've got Supermicro that's trying to turn green at the open here. That doesn't surprise me. It's somewhat unclear why it's taking such a hit. You've got ARM, though, down 4%. Also, kind of getting stuck there. Let's look at the non-average. Yeah, they're both trying to push up here. Nvidia's trying to push up. You've got the Qs that are actually pushing down. Indices pushing down. Netflix is trying to recover. ARM's trying to recover as well. And let's go see here. We got the Qs. Oh, Qs dropping. Qs really tanking there all of a sudden. What the hell? Okay. That's a big sell move for the Qs at the morning here. So what's pushing down? Wow, Apple down another 80 bips. Tesla actually trying to recover a little bit. They're only down about 40 to 60 basis points here. How's the good old Donald Trump DJT doing? Yeah, ARM is still trying to recover. DJT's up 7.5%. You've got a line there. And let's see here. Let's go watch Nvidia. Yeah, you got that red candle coming on Nvidia here. So, very interesting. Okay. Why are the Qs doing this? Okay, looks like you're trying to recover here. Let's see what they've got to say to us.
And I think that this was just another quarter in line with many good quarters. Yes, restaurant not up as much as I want, but every trend's good. And by the way, his losses, that's what I'm focused on. His losses are much lower than, say, Discover. Much, much lower.
He did say that Discover, Capital One, they've got a lot of work to do.
Yes, they do.
Charge-off still 2.1 is a shade below pre-pandemic still.
Right, but I would point out that this is a man who has reinvented this company and has taken it to being the mind share of the people who are in their 20s, who you really need, is incredible. Because as he said, he walked me through this once. You see, Jim, in their 20s, they get the card. In the 30s, they start using the card. And in the 40s, they start taking the points and they use the kind of like what my wife does. She's got that stack.
Oh, yes.
That stack. And they don't go to me.
Oh, yes.
It's incredible. The bill goes to me, but those little things
all the rewards,
her.
yes.
How's that possible?
That's exactly how it
works. I gotta
works.
look into that.
Jim, the other trend regarding Fifth Third Huntington is basically provisions in line, guidance unchanged. That's sort of the running theme this morning.
I know, and you want the net interest income to be good. And I actually don't want the net interest income to be good. I want the business to be good, and that's why I continue to like.
Well, I mean, that's part of the biz, Jim. Come on, man. Come on, buddy. What are you doing? All right, ARM's coming back down after its run right there. Trying to watch these pretty closely here. You've got ARM, you've got SMCI. This very interesting sell-off in the morning there. Nvidia's popping down about 90 bips. Netflix still down about that 6%, but very interesting sort of behavior. It does look like the Q's trying to sneak up. Yeah, Nvidia just popped up a good chunk there as well. So watching Nvidia and the Q's look like now you're trying to push a little stronger. And let's see here. ARMs. Oh, you're still getting those red candles. You're getting a lot of fighting going on here at ARM and Supermicro. Same thing at Nvidia. ASML's down 12 bips. TSM's down 1.27. AMD just always gets slaughtered. I don't know what their problem is. Bitcoin's under 65, which is better than where we were yesterday by a good chunk. Tesla just turned green for a second. Wow. Wow, look at that. It did only turn green for a hot second there, and now you're getting your sell show. Let's see here. Nvidia's still down 70 bips. American Express up over 2% now. Good for them. And let's see what our bigger movers are today. Is AMC moving today in trades? Not really. AMC's still in bleed mode at the moment. No, I don't new type. Trading futures on Webull, I don't. Still pushing green here on ARM. Supermicro not doing as well. Nvidia's trying to push up. And the Qs, I mean, Coinbase up 3%, that makes sense. TSM's trying to recover. Nice recovery coming in for TSM here. And watching the Qs. Qs are actually bleeding down. Look at that. Right back down to where they were at the open. No movement there. Tesla back down 23 bips, potentially on that recall news. Wow, Amazon down to 177. That's down $10 since, frankly, last week. So substantial move there. And, yeah, all right, let's keep listening in here, and then we'll jump to Doomberg for a moment, too. Oh, there's a big red candle on NVIDIA.
Mary Barra is doing great. Hey, Mary Barra's at Dirt Trucks, the accelerator, it comes right when you take your foot off it. It doesn't keep going. Hey, that's
a plus.
Positive. Then you got the good torque, you know.
We are going to get Tesla on Tuesday. Jonas did say yesterday, situation may well deteriorate further. Is the company exiting the traditional EV business? At the margin, it seems so.
Yeah, it is. I don't. You know, it's very hard to criticize a genius. You know, I don't want to be the guy who says, you know what, that Mozart, that Hafner and Jupiter, forget about it. You got a guy who is a genius. When you speak to his competitors, here's what they say. But, you know, he could pull a rabbit out of the hat.
NVIDIA's dropping 1-2 now.
You know what the rabbit is?
Yes.
I don't. I mean, I'd like to know what the rabbit is.
Right. We'll
I
watch
had rabbit on Wednesday night.
Really?
Yeah, I took that over the pigeon.
Okay, this is a waste of time. Let's jump. So, yeah, I don't know why, but NVIDIA's down like 1.5% right now.
Maintaining top and bottom line guidance. Amex says its high-end consumer that it really caters to is very strong, and it continues to remain strong. The CFO saying we're not seeing any softness at all in terms of demand for premium cards, reporting a 9% growth in spending, especially on airlines, especially in first class and business class. William Blair calls this a strong start to 2024, but they say that they're really waiting on an investor day that will be April 30th, Manus.
I still travel coach. Simone, thank you very much. Simone Foxman there with the very latest.
Netflix is down about 8.5% now. Super Microcomputer just dropped down to 8% as well. ARM's down 3.3%. Astera Labs is down. AMD is down 3%. NVIDIA is down 1.5%. This is a bloodbath right now in the chip sector here. Bloodbath. Quite remarkable. So on the upside, you've got DJT. American Express, let's go, 3%. That's one of the first after earnings to actually run. Very few green today, though. Just a little over a page here. A lot of volatility, that's for sure. Look at that super micro. Good lord. I was trying to go push a green candle here, but wow. Q's still down 0.5%. Just getting that slow bleed here. End phase down. Tesla's almost down a full percent again. 148. Wow. Wow. Apple. Yeah. Jeez. Super micro. All right. So.
It's becoming pretty obvious. The Fed's going to have to wait longer before they begin cutting, and we'll even find out how much they eventually cut. And the geopolitical situation we know is still running hot. And the valuation at the S&P 500, particularly against these interest rates, and just a 20.5 PE multiple on this year's earnings estimates, this is still an expensive PE, and that's why next week, where about 40% of earnings are reported, the beats need to be big. The beats really need to be over 5% on average for us to have any, continued confidence that the $243 that we and the street are estimating are really achieved, because those estimates for the year are back-end loaded with a lot of growth coming in the third and especially fourth quarter of this year.
Where is the biggest susceptibility to disappointment on what you need to create the floor. We're at the money now at the moment. We're at the money at 5,000. So next week could be pivotal to open up the trapdoor to 47.50. So where's the susceptibility?
The trapdoor to 47.50 on the SPY.
There are two key parts of the S&P 500, and each of those parts has their own susceptibilities. The 492 S&P 500 index stocks that are not the grade 8 digital type names, they're susceptible to a further increase in interest rates, and I would argue their PEs at about 18.5 on average are very high versus a 4.6% 10-year Treasury yield or 2.2% 10-year TIPS yield. So the 492 is at risk to these and higher interest rates. And when we look at the earnings that are coming from those companies, particularly ex-financials, there are some green shoots of improved earnings growth. But if those companies don't beat by at least 5%, then there'll be flat earnings growth year on year again for the S&P 492. So, I mean, there are pockets of strength, industrials, there are pockets of weakness, energy and others, but this is really sluggish earnings growth outside of the grade 8. And at these interest rates...
I mean, it's shocking to me because, honestly, these companies are doing so great at the moment, broadly. It's just they're not, like this guy's coming on to Bloomberg going, you know, we really need companies to beat the beats that we're expecting by another 5%. So if you don't actually beat more than the beat we're already expecting, we're selling you. This is like the kind of suit that people just don't like.
American, I always feel like I'm the poor retail victim left at the back of the bus.
Exactly. He literally just, exactly, the poor retail victim at the end of the bus.
Money, as I've written down here, $21 billion flowed out in the last 2 weeks, the biggest outflow since 2022. And yet the fund manager survey is the most bullish since January 2022. What do you see in terms of flow? Are the retail like me left on this bus at the moment, vulnerable to a material drawdown when institutional flow is taking money out?
Well, I think when you look at different investor types, big money, institutional money has an asset allocation type mindset, and big money is definitely noticing the attractive risk-adjusted opportunity being provided by bonds right now.
Yeah.
Short duration, but also inflation-protected longer bonds, and that just cannot be denied by those who have to make and do make decisions across asset classes. I think they're going to use these short-term interest rates to see how things play out and take a little and further risk off the table. I would argue that retail investors, where we have seen signs of their risk appetite cooling a bit, they are still confident in the AI story. But I think you know, those type of investors also need to be a little bit more appreciative of valuations, and that not every company is going to be a winner in the end, and competition will heat up in that space, particularly semiconductors.
Yeah, well, I mean, I had the Norwegian Sovereign Wealth Fund with myself and Danny just the other day, and they are cautious about the valuations in tech, and not so much that monetization can't happen, it's just how quickly it can happen in the AI space and the timeline to that margin. You talk about financials, we talk about this higher for longer narrative, you talk about the valuations not exactly being stretched. We've just gone through the reporting with JP Morgan, with Wells Fargo, with Goldman Sachs, etc. Differentiate for me now on financials in terms of whether you want to be in regionals, whether you believe the CRE is past, or whether you want to be on the big beasts.
So let me start by saying we are a little cautious on markets going into the summer before the election, and financials are clearly higher than the stocks. But those who are more optimistic and those who are looking to, you know, make plans where to act upon a dip, we would point out big financials, big banks, big insurance, big asset managers, big brokers, big exchanges. And the results that are coming out of these companies are good, and capital markets activity is good and has potential to further accelerate. But I think big is the key theme when it comes to financials. These big institutions have the deposit base, they've got the confidence of those who buy their securities, and they are the ones in the position to continue to invest in technology, AI productivity. I'm really afraid that smaller banks and smaller financials in general are going to fall behind, be left behind. We know the challenges of regional banks. I don't want to overly beat up on them because those valuations are beaten up. But I would stick with the big banks. I would stick with the big financials.
Big is beautiful.
And for those who've been arguing, yeah,
Big is beautiful. David, we got to leave it there. We got to leave it there. You're right.
Right,
Hunker down for
Oh, I just cut him off hard. Tired of this guy.
of reporting.
That was good though. That was really interesting. You know, I definitely saw that as interesting. It's not exactly how could I say like delicious, where it's like oh yeah, you know. I agree with everything this guy is saying, but I do think he's not wrong on one hand, where earnings are probably going to come in and stocks are going to go down. That just seems to be what so far this earnings season is all about. Not sure about that. We'll see. So we'll watch that closely. Okay, good. Let's pop on over here for a moment. Let's see if they have anything interesting for us, and then we'll do a little more searching of what the suits are saying.
That open source leads to better, safer, and more secure products, faster innovation, and a healthier market. And beyond improving meta products, these models have the potential to help unlock progress in fields like science, healthcare, and more.
You'd probably start toying with
Just reading a script there.
Look, I mean, he's one of NVIDIA's largest clients. Of course, he said ahead of the Time 100, which is now becoming a referential meeting. He did say incredibly positive words about Jensen. By the way, if I were a customer of Jensen...
NVIDIA's recovering, by the way. It's only down about 48 bips right now versus the 1.5 it was down. Netflix still down about 7%.
Make the chips fast enough. I think people say he bought 300,000 of the current iteration. He will take anything a block. Yeah, this guy would actually buy the whole. I think he'd buy the whole line, everything that comes off the assembly line of NVIDIA. And one of the reasons why I swear to NVIDIA is because I like companies that can't meet demand.
Q's going up as well. NVIDIA might be trying to get back to its 850. We'll see.
Man, it's like you get a firm like KBH, they commit to a higher dividend, and they buy back stock. Yeah. You know what they're not doing? Building homes. They realize that their stocks are better investment. Doug Yearley started that at Toll Brothers, where he just said, listen, I'm just going to go buy my stock because it's the cheapest way to buy much better than putting up spec homes. Yeah, that's why the home builders can go up in an 11 hike cycle. Really confounding Jay Powell, who didn't see that coming.
I mean, Goolsbee would argue it is the high rate that is inflationary itself, because it reduces supply.
Goolsbee is a very practical man. That's totally true.
Yeah.
Goolsbee, whom everybody nicknames Foolsbee, unfortunately for him, he's been one of the doves, honestly. Very, very dovish. He's been not so enthusiastic about hawking. Yeah, I do notice that a lot of people kind of just disregard his opinion. I think it's frankly because he's newer on the board, the FOMC. And so he's getting less respect, so to speak. That appears to be one of the issues the poor guy faces. But anyway, he has his commentary, so which is more bullish. Okay, what else do we have here? So yeah, NVIDIA dropping again now. It's a kind of a very interesting market where what you have is AI trying to come up, and then it goes back down. Look at this. Sorry, I thought we were over here. You've got AI that was going to the 850 line, comes right back down. This is becoming a tough one to play. The play on super micro, every time it bounces, it seems to come right back down. So again, dangerous play. You've got some potential on the Qs that come back and they go back down. Netflix down 8%, Nvidia down 1%. Everything's just a freaking mess over here. You've got Enphase, Tesla's down 40 bips. I don't know, it's not great. ARM down 2.5. So, boy, trying to figure out, unfortunately, the direction right now on AI. If you could get that right, man, that would be nice. That'd be nice to figure that direction out. What you really need is the ability to just like have a crystal ball. Then we can all make money. I think the best crystal ball though you could use is lines. Lines in trading. If you can trust the lines, that's the way to go. But yeah, anyway. So okay, so what do we have today? Other than that, I want to see what's going on. Maybe let's look at 5-year break even. Let's take a peek at some of the other nonsense that's going on. So we'll go 5-year break. Let's go 5-year break. 5-year break even. We have. Wow. I don't know if it was the Israel war or what, you know, the counterattack, but holy crap. This just fell down all the way to, frankly, 2.4 on the 5-year break even. So I don't know what the heck is going on over there, but it's wild. You have some really wild moves on that 5-year break even. It's a good thing though to be dovish, because you don't want the 5-year break even to be skyrocketing the way it has been. It's not good. So you know, woo boy, that's crazy. Okay, so I'm gonna see here. Let me see what's going on. This, if I go to, yeah, it's down from 255, literally just yesterday, plummets to 243. So not sure what happened there. And that's the 5-year break even. I'm suspecting it's because of our yields drop and the flight to safety that we saw. Does that mean the 210 narrowed? Let me see here. So I'm going to go to 210s, and we could just, you know, calculate it, but you don't even need a chart to do it. The 10-year yield is at 461, so that's only down a little bit. And the 210 spread hasn't moved much. We're still 37 basis points inverted here, so not really a big deal. You've got the 2-year. Let's see what the 2-year is doing. 2-year right now is doing, it's almost at 5%, man. Oh, it's rich. Rich. So, okay, so where are the trades today? So look, this is hard. I'm going to go the average right here because I don't need to watch the minutes at the moment. You know, when I trade, obviously I go to the non-average. But let's just see the trend here. So you got like a double top on ARM, but really anything could happen. This is an important line for DJT, by the way, $35. So watch $35. Everybody who's part of the Stocks and Psych group, I sent an alert on this already, so you could see if I have any plays on this. Check out that $35 line. And if you're not part of the Stocks and Psych group, we have a coupon that expires tonight at 11:59 p.m. Email us at staff@meetkevin.com if you haven't bundled up already. But if DJT can't hold $35, this sucker could print if you go short on it. And I don't know. I mean, it could also skyrocket past 35 and then you're screwed. So, you know, probably you want a stop loss. And Netflix is recovering. You're back to about 666. And see this double topping on AI? This is tough. This is a tough double topping you're getting on AI. The Qs, I don't know what the hell to call this. This is a disaster is what I'll call it. You know, banks are actually doing well today. Financials are up. And that's really led by American Express. American Express is really driving the financials today. They had a good report. I'll give them that. You know, it was a good report. So on the 1 minute on BTC, volatility, nothing really exciting to see here. Let's average this out a little bit. Gosh, the average looks so much better. Tesla, this is a consolidation. You know, I mean, that can break to either direction, frankly. So, yeah, you'll have to be watchful, too, on where are the Qs. Just seeing what the Qs are going to do. See, the Qs are trying to push up right now. So watch the Qs. ARM's trying to recover. You've got... Oh, let's see here. What else? What did I... Oh, I wanted to watch Coin. Let's see Coin for a moment just to see what they're up to. Okay, there we go. So, Coin. Where the hell is it? Oh, here. It's right here. Okay, so this 223 line on coin, it's very common for this sucker to basically run, or should I say move to that 223 line, and then if it breaks through that 223, I see it regularly dump. And what it does is it just ends up dumping down to 218, or sometimes even breaking through that. So I do find that that's worth paying attention to. Okay, let's see here. What else do we have? Consolidation over here. Yeah, just getting stuck in the mud. Boring. Boring. What else? Then... let's see here. Okay. What about... let's see. I'm going to go... take a peek. SoFi. Oh, look. SoFi's got a line here at the 720. Pay attention to that. Matterport. Wow. It's still bleeding. Oh, people thought $2 was the floor on Matterport, and Dave & Buster's gave up $13. Matterport just keeps dumping. Costco still has hit its top out. Not a surprise. Yeah, Nvidia's right back to bleeding, down 1%. It's just annoying. Let's listen in a little more.
Including the black hole that is Boeing.
Tough week on the Hill after that. With,
yeah, I keep thinking about the B-29, and my father was just, oh my God, it was all bad. It was all zeros. And then one day the B-29 appeared, and everybody clapped. And they said, maybe we'll win the war. They ought to think about that at Boeing. Go back to that period.
Jim, good show. We'll see you tonight.
History. History matters.
Yes.
Whether it be the third quarter of Proctor, whether it be 1973, or whether it be 1943.
Mad Money, 6 p.m. Eastern tonight. When we come back, Wharton's Jeremy Siegel will get his take on this market environment in a minute.
All right. Boring. Oh, maybe the suits have something for us in writing. I'm going to go look at the suits again. Just see what they're up to, but give me a sec here. Let's just check here first.
How will your investments stay resilient?
Nothing. Okay. Fine. Fine. But what about the fat tail? What is this? That's VIX. Downside protection. While longer dated equity put volatility has recently risen, as implied volatilities across assets across the curve, deep downside protection in equities over longer horizons is still cheaper than usual. Still cheaper protection out there for you. How's end phase? Yeah, let's see. Oh, Nvidia's trying to come up again. 0.5%. Okay. Let's go to end phase. See what we got. End phase is bleeding. Not much, but just a little. A little bit of bleeding. All right. What about... let's see here. So... let's see what is Goldman saying today? How about that? We'll try that. Jump in here. Let's see. Goldman, what have you for us today? This is boring. Nothing. Okay. Brief update on Iran. We basically already covered that. Looking for an off-ramp for the Fed. What's this? Oh, let's see here. Middle East tensions are driving risk lower. Right, risk appetite. Big issues. Okay, here we go. See, this could be interesting. So this Goldman piece here is also reminding you of the expiring coupon code tonight on the courses on building your wealth. And the buy-sell alerts in the Stocks and Site group. A lot of people bundling that with real estate. Here's a piece from Goldman. The bigger issue for markets is the notable change tone. Change tone. I haven't heard that one before. It's a change tone, folks. The notable change tone from Fed speakers. Williams was taken a bit out of context, but it's clear that if the data stays hot, we might need to debate putting hikes back in the distribution. It was the first instance of a Fed speaker introducing symmetry in the policy path that I've seen. Okay, that sounds complicated, but it's basically saying everybody's like, we're up to down on rates. Now you have somebody saying, I'm sorry, we're flat to down. Now you have somebody saying, nah, we could actually also be up. So it creates this balance is basically the argument here, right? This idea that, oh, okay, yeah, we can also raise raise rates if we needed to, right? Okay, so interesting. All right, let's see what else here. Okay, so let's see here. Is the first instance, okay. Glass half full, the Fed has now caught up to the market and acknowledged the strength of the data. That's true, because J. Powell's kind of been ignoring it, which is annoying. Glass half empty. There are a lot of cuts in 2025 that still need to be taken out. Ouch. I should make that red. Okay. I think I'm more optimistic. The Fed is very sensitive to any weakness in the data, and it would take only one or two negative to solidify cutting. That's fair. Like, you don't actually need a lot of negative CPI reports, probably, to see a dumpy doodlah in the Fed's behavior to where they instantly go dovish. Like, imagine if we got a CPI report that comes in, we're expecting a 0.3, let's say, on core, and then what do we get? We end up getting a 0 or a negative. Like, it would change the 3 and 6 month averages. It'd be a game changer for the Fed. So I'm sure they would love that. But yeah, good luck, I guess. Maybe one day that owner's equivalent rent figure will finally come down. One day. Oh yeah. Okay, so TSM, despite beating numbers, is down over 5%. That's something that we talked about. Most seem to be attributing that to a slight downgrade in industrial guidance related to smartphones and otherwise, right? L'Oreal overnight, giving us some glimmer of hope with upbeat comments. Didn't some people say there was a L'Oreal index? The L'Oreal index? I heard somebody say that. Let me see. That, like, if they do good L'Oreal index earnings. I don't know if that's true. Has anybody ever heard of that? I feel like when they do well, people suggest that, like, oh, that's good. And they did. They did well. They reported a 9.4% rise in first quarter sales, and most of that helping ease concerns about a slowdown in the two biggest beauty markets, blah, 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 French cosmetics, okay, blah, blah, blah. Maybelline, Lancome, sales growth exceeded a consensus of 6.1%. Sales were up 8.3%. That's fine. World's biggest beauty company said sales in both North America and Europe grew by more than 12%. Mass market range compensated for weakness, blah, blah, blah. West continues to power on. Mass market offset luxury. See, that's interesting because there's been a big fear that the luxury market, like driven by your LVMHs, your Louis Vuitton, is basically weighing down the market. And so if mass market can kind of save the day, great. That's L'Oreal's take. It just seems like we're late in the rally, and the market tolerance for any cracks in the story is near zero, the earnings quality. That's an interesting way to put it. L'Oreal overnight gave us some glimmer of hope with upbeat comments of the U.S. and EU consumer. Okay. Interesting. And that's it for their note. Okay, fine. Boring. Okay. That's interesting. I mean, I think that's exactly what we're seeing is this concern of, okay, well, if you don't, like that suit guy was saying, if you don't give us enough of a beat, we're selling. Wow, SMCI is down 10% now. Crazy.
Right now with Tim Chubb. He is CIO over at Gerard. He joins us now, and I'm looking at the S&P 500. We are poised to close lower for a third straight week in a row. Clearly, we've hit some sort of air pocket. Do you think that this is just needed a healthy sort of reset here, or do you think that this is the start of maybe a more sustainable downtrend?
Yeah, well, thanks for having me, Katie. I think ultimately, as we had this unbelievable momentum and liquidity-driven rise coming off those October lows, that we had just simply gone too far too fast and really had seen all this multiple expansion, estimates get pushed out further into, the streets, 2-year forecast. And so just a complete decoupling, for earnings revisions, from economic surprises, obviously from rate cut expectations from the Fed and real rates. And as yields have moved higher, there was quite a bit of complacency in the market. And so, with all that said, earlier this week when Taiwan Semi had reported, everybody seemingly was quite upset and looking around for kind of what was going on. But it's been up 50% in the last 6 months. And so I think in a lot of ways, it's okay for a good stock like that. And some of these really, high quality companies that really led the rally since the October lows, that when expectations are too high.
So maybe the leader's taking a little bit.
Well, yeah, it's not only that. It literally seems to be, because some of the expectations are getting beat. What it seems to be is that as the expectations get beat, people actually want them to beat by greater, right? So yeah, I see this comment here about Wall Street basically being addicted to like revise up even more, and that's really hurting.
Setup where we're starting to see some green shoots, especially in the R&D front, and with so many patents expiring for some of the large mega cap pharma and biotech companies in the next 10 years, there's a huge rush to fill up that pipeline. Lots of M&A activity that's taking place as a result of that, and ultimately it's defensive sector. And I think in this environment it really is important, obviously, to be selective and looking very closely with where and how durable growth may be moving forward. But on the other hand, the defensive characteristics that the healthcare sector provides, even some of the cyclicals or quote unquote cyclicals within the sector, I think are still reasonable.
But how has healthcare been doing? Like, I know Moderna and Pfizer haven't been doing that great, but that's coming off the COVID vax high, right? So let's take a peek at that. Let's go. So if I jump in here and I go out to the week chart on some of these, and we'll just average this, you can see Moderna's, who knows? Is that like, when do these become a buy again? Honestly, I think so many people are just like so like grossed out right now by Moderna and Pfizer that it's like, it's almost hard for people to have them in their portfolio. So instead you have like a Glaxo. Let's put Glaxo in there. How do you spell them? Or what's their ticker? GlaxoSmithKline. GSK? Is that it? GSK? Yeah, see, and these are all the companies playing the, the weight loss drugs, as well as Lilly. Eli Lilly has just been killing it. And so it's kind of like, what do you pick? Do you pick one that's like at all-time freaking highs? Or do you pick one that's at all-time lows, but has sort of like a disgusting, depressing, like reputation, right? Like, yeah, like this person here on X says those are scam companies. They lied about everything and will never recover. That's the point. Is like that sentiment is going to make it very difficult for fund managers to put those stocks in their funds because, people just don't want to be associated with some of these. I get it. So it's very, very interesting. Nice. Somebody here, Ellis, I crushed the DJT put. Let's go. Up 30%. Join the courses, everyone. Congratulations. Good job, man. That's freaking awesome. Check the Apple chart warning. Let's take a look at the warning on the Apple chart. I think that 35 is in play today for TJT. Donald J. Trump. You just have to be careful because this stock moves extremely violently. To the up and the down. It's crazy. But anyway, so here's Apple. So Apple's run all the way to, this is sort of a bizarre fib pattern we have here because we're using the old and then extending. We probably ought to do is recreate these fibs and see what this looks like. But anyway, yeah, Apple's not at a fantastic spot breaking through that 169. That's been a support, and it does suggest that there's a chance you could drop another 10 bucks, unfortunately, on this play. So not great. Something to pay attention to on Apple. And then, of course, the question is, are they just going through sort of a bearish cycle? And is this sort of a buy the dip opportunity, or is this structural, right? So then you've got AMC. And we got to get to the course member live stream here soon. AMC is actually picking up. Look at that. They were down a couple percent here in the AM. And now they're up about 4. So good for them. And then we've got, holy crap, dude, Super Micro's just bleeding out. I don't even think NVIDIA's bleeding. No, NVIDIA's bleeding as well. Whoa, NVIDIA, Super Micro, ARM. I mean, ARM and Super Micro obviously bleeding substantially more here. Yikes. It's just dirty. ASML is actually up 0.5% right now. Tesla, it's still consolidating. You can see you're right now between the VWAP and the 100-day. You know, maybe you'll end up getting a breakout here in some direction. I don't know. What's DJT up to? It's probably, it's bouncing around that 35. Look at that. See, that's the second time now. I mean, you've had these sort of failed supports, but you've come back. And it keeps playing this 35 line. It's having a lot of trouble breaking 35. And I think that reiterates that there's a potential larger move to the downside. But again, it doesn't take much for this thing to just take one large candlestick to the top. And if you play an option on this, it could go to 0 like that. That's why, like, if you got to play it, you got to put a stop limit in there, stop loss. But holy crap, look at that. SMCI. Oh, oof. I made some money shorting them this week, but wow. Wish I had a short going into them today. But that's always how it is, right? The woulda, coulda, shoulda. But that's okay. Wow. 13% now. And I don't even think there's news. Let's go pull it. I think it's just sentiment. SMCI. Going into earnings, people are like, let's take some profits here because, earnings so far aren't going great. No. No news. No news. Other than people tweeting about it. But that's not really news. NVIDIA's almost down 2% now. And it's dragging down the Qs. Golly, man. Apple down another percent. Oh, boy. Rough earnings season. Yeah, look at that. Right there at the 223 line on Coinbase. Those are the lines we talk about. If you break that 223, you're probably going to 118. So, and that's a shortable move. Frequently, when we break the 223, you actually end up going all the way down to like 113. So no guarantees, obviously. But we see that a lot in the course member lives, which I'm gonna make another coffee. We're gonna jump over to the course member live stream. So I'm gonna go push the button, and appreciate y'all. Thanks for being here. Remember, coupon expires tonight for all the programs on Building Your Wealth bundle. If you need a bundle, email us, staff@meetkevin.com. Any questions you have, we've got a whole team help you out. And then metkevin.com/roadshow for the House Hack Roadshow. Make sure you vote. We're going to start doing the Roadshow Tuesday. So that's coming up. On Tuesday, we start the Roadshow, and I'd love for you to be there. And then we're moving up the deadline to, I think, May 1st or 2nd to be able to invest in House Hack. Go to househack.com/2024. Just click the little investor tab, and you'll see more about it. So push the button.
Go yourself. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Yeah, I see someone talking about massive news on SMCI. I don't see it. You know, I'm looking at Refinitiv, Doomburger. Oh, Kevin Levine, thank you so much for the $50 super sticker. That's really nice of you. I vote for the Antique Roadshow. Nvidia just dropped below 2%. Or sorry, like more pain than 2%. So we're at 2.2 right now to the downside. Yikes. And wow. Yeah, definitely some AI pain here. So anyway. Okay, folks. We're going to go make some coffee, and then we're going to go run. Thank you so much for that super sticker. That was really cool. So shout out to you, Kevin. It's a fellow Kevin. So SMCI, it's their lack of guidance in their PR press release. Let me see. I'll look really quickly. SMCI Investor Relations. Did they release something? I don't see anything. No latest releases, events, presentations, news. Oh, April 19th. What is this? No, it just says we're going to announce earnings on April 30th. Okay. Hear me out. Somebody says they announced a 2% reduction in workforce. I don't know if that's true, so we'll call it unconfirmed here, but short SMCI before it's too late. They didn't revise earnings up. Oh, okay. You're saying because in their press release. Oh, I get it. So, like, if there's a large revision, you're obligated to give a heads up to shareholders. You're saying because there was not a pre-release, that lack of a pre-release indicates not a big beat. They always revise up in this report. I see. Yeah, okay. So it's actually interesting. It is the lack of news that is creating news. Gotcha. Very, very interesting. So crazy. Anyway, folks, thank you. As always, thanks for being here. I'm going to make coffee now and go to the course member live stream. And we'll do some more course member live streaming. Goodbye, everyone. And go to metkevin.com/roadshow. Make sure to vote on the city. Meetkevin.com for the courses. And metkevin.com/life for life insurance you can get as little as 5 minutes. Yeah. Paid partnership.